On Apple and Amazon in particular, both seen as sort of keys to where this market is going, you have very aggressive price targets higher for both of those stocks. Are you looking at revising those at all, or are you sticking to your guns?
Well, so what you're talking about is kind of the challenge for tech investors, which, as you know, when shares are down 50%, they essentially have to go up 100% to return to the levels they were at previously. But I do think for Amazon and for Apple, there's reasons to believe that the sell-off's overdone. For Amazon, they had fantastic profits in the June and September quarter, and we know, for example, that they already had terrific sales for holiday, and to the extent that their cloud computing efforts are continuing to do well, I think 2019 will bode better than people anticipate. And then for Apple, I think there's just way too much negativity in shares, and what people are over-discounting is that the higher selling prices on their new iPhones may enable them to generate sales growth on lower unit sales. So I think there's reason to be more optimistic than the market is currently on those two stocks in particular.
Why do you believe the market has it wrong then? Why? I mean, what about that negativity strikes you as being overdone?
Sure. So I'd see the big sell-off in tech as a reflection of concerns on rising interest rates and then the prolonged and often escalating trade war between the U.S. and China. Now, hopefully, as 2019 progresses, there won't be too many more interest rate hikes. And then as it pertains to China and the U.S., hopefully as the year progresses, they'll figure out a way to forge some sort of lasting agreement, and these tariff concerns will go away. And I think that'll bode for a much better environment for tech in general and Amazon and Apple specifically.
On the other hand, Tom, many people think 2019 is going to be the year we finally get some regulation out of Congress on privacy or on some of these other scandals influencing news releases or what's the so-called fake news in some of these social media companies. Do you think we're going to get something out of Washington, and who will it impact most?
So I would argue that in some ways we sort of have de facto regulation. So Europe passed their data privacy laws, and I'm fairly certain that the state of California followed suit. So I do think that while we don't have regulation in the books, you're starting to see that sort of expectation as it pertains to privacy for U.S. consumers. So I would argue we have it de facto today, so maybe we'll have official laws later. And obviously the big impact there is on Facebook, which is basically in the midst of kind of an identity crisis of its own as it tries to manage its large billion-plus social network, and then also protecting the privacy of the members of its social network.
Finally, what stops the broader selling in the technology index if the market is concerned about higher rates and economic slowdown and loss of liquidity and quantitative tightening, which has propped up this group for the last decade? Now it's unwinding.
Well, I definitely think that on the interest rate front, an argument can be made that we're near the end as far as interest rate hikes. So to the extent that the economy may soften, the good news there is you might see no more interest rate increases. And then also, if you look at Amazon in particular, this is still a company that generates very significant revenue growth. And while investors are currently digesting, getting used to the new highly profitable Amazon, there's still a lot of sales growth in Amazon, and I think a lot of reason for optimism there.